I'm so excited for today's conversation. This is something that's near and dear to my heart as a member of the fire community as well. We have Jackie Koski and Daniel Huffman. I'm going to call on you Dan along the way, if that's okay. It's just
That would be great.
the quick name that comes to mind. We're talking about financial independence, retire early, also known as FIRE, or FI-RE. And as we'll find out through this conversation, just like in every part of personal finance, keep finance personal. There are so many misconceptions about this movement, this community. We'll dive into misconceptions. We'll dive into opportunities. Don't just talk about the bad, but the good, and how we can become better financial planners when serving families and individuals on the path to financial independence. Both of you have achieved your own level of financial independence. I'm on my own path, but we'll talk about how it's not about the destination, it's about the journey as well. What does financial independence, retire early, FIRE mean to you? And how did you even come to find out what that meant?
What it means to me is really not depending on a paycheck to be able to follow my dreams, not worrying about, am I going to get paid? If I get laid off, am I going to be able to find another job? To be able to kind of make my own paycheck. And I still see money as an obstacle, something that once moved out of the way, you can more freely move towards your goals and your dreams. And that's how I felt. And I've gone through the process, and I use the whole FI/RE because, the retire early part, that's optional. For me, I did have to retire early because my corporate job, it had nothing to do with personal finance. So, for me, it kind of started, I grew up, very, very poor, but I was raised by an amazing dad. But he had 6 kids. I was number 5 out of 6. And I don't even know how he did it. But what stuck in my head from growing up, so poor, the reason why we couldn't do most things was because we didn't have the money. We couldn't go anywhere because we don't have the money. We don't have the money. That kept ringing in my head. So I figured when I got older, I did not want to be in poverty, and I wanted to be able to have the things that I wanted and do what I wanted to do without constantly worrying about money. So as I went through life, I was doing things to get the financial part right. And finally, when I first discovered the FIRE community, I think it was really shortly after my divorce, and that was a huge wake up call for me. I had a 9-year-old daughter at the time. And after taking a couple years to kind of get refocused, I ended up joining an investment club. But then shortly after that, I started digging. My way of learning is podcasts. I love listening to podcasts. And the personal finance podcast started niching down. It had things like financial independence, real estate, and then finally it was the retire early. And that really is what got me. And I started on that journey once I started getting very, very curious and started kind of looking at my own numbers. So that was kind of my venture into the whole, FIRE world.
So you mentioned poverty and financial independence. These seem like kind of barbell, like on like almost binary, like, people say, money can't buy happiness, but poverty can't buy anything, right? Like poverty is kind of like on this side and financial independence. So how do you think about this spectrum though now as like kind of financial solvency, stability, and independence? Like, was it that binary to you in the beginning of like, you're either going to live in poverty or you're going to be able to afford anything that you want?
Yeah, I mean, for me, like you said, it was a spectrum. And I always think about if I can go from being in poverty, and once I started learning about money, it unlocked so many opportunities, so much freedom that it made the difference. And I got to, I guess, a point on the spectrum where it was enough. And I started saying, okay, my cup is full. My cup is running over in my mind. I want to share it with others. When people say, money can't buy you happiness, in some ways it can when you're on that beginning spectrum, because poverty, again, keeps you from doing the things you want to do. You don't have the money to do anything, to get the things that you want. So once you've got that, once that cup is full, how much more do you need? And only you as an individual, like you said, personally can answer that question.
Everybody has to define what's enough, and not just enough to retire, but enough in every moment, like along the way. If you say like, how much is enough work? How much is enough time, the separation between my personal and my business life. Like what's my balance there? Again, some people don't believe there's such thing as work-life balance, but everybody defines it differently. And I loved how your level of financial independence will look very different. By the way, great transition. I'm sure your definition of financial independence might look very different from Dan. How you've approached financial independence, retire early in the FIRE movement, but also what your own objectives are and what's your why behind this whole movement for you.
One thought I have about what Jackie said too is I think maybe even harder than achieving financial dependence is achieving contentment, because that is the thing that stops the carrot from always being ahead of you. And when you finally, I think the FIRE community helps you figure out what is enough and what you need, and emphasizes quality of life enough, that is really, really helpful for a lot of people, I think, who only know to hustle or only work hard and work long hours. I started out maybe similar-ish background, except there was only 3 kids in our family instead of 6. But, it was really not until I got to college and I took an economics class and the professor had us read Rich Dad, Poor Dad and The Millionaire Next Door. And all I remember is I think that was the only C I ever got in college, but those 2 books changed my life. And so it was amazing how just the simple principles and just the knowledge that this is possible when you don't grow up seeing that modeled. And I think my parents worked very hard and they definitely did their best. And I took a strong work ethic from them, but just the ability to manage money, to invest money, to make it grow, to make it work for you so that you can spend time making a bigger impact in other areas. I think that has been my biggest why.
A common theme that you both mentioned is that financial independence didn't seem like you wanted to retire early so that you could just lay in a hammock all day and do nothing and stay lazy. You see this opportunity as the more freedom you have, actually, the more free you are to give and like give back. I think of Gary Vaynerchuk. Gary V talks about like one of his goals in life is to give more back than he's been given. Growing up in a place of maybe not having everything I wanted, but I felt like I had everything I needed, it ingrains into your mindset. Sometimes we'll talk a little bit about maybe some money scripts that are involved, possibly with even like there might be some common threads within the community, even though we all think about it a little bit differently. I was actually consider myself a member of the FIRE community before becoming an advisor. And I'm actually, all 3 of us, we embraced the FIRE path before becoming advisors, before becoming planners. And it was actually a little hard for me to, explain, but even come into the industry, because anytime I would explain to somebody, oh, like I'm on the path to financial independence, or like I love working with clients who are, kind of on the path to FIRE. Many financial advisors then and even now think FIRE is nonsense, right? So with that said, what are the common misconceptions about the FIRE movement? I'll start with you, Jackie. What are the biggest misconceptions that you saw as soon as you joined the profession?
Well, I'm glad you made the connection from, sort of being a part of the FIRE community to being a financial planner, because if you think about it, okay, financial independence, that's all about what we do in financial planning. Retiring, that's all about what we're doing. We're just doing it a little early. So on the surface, it's really not that, complex. So some misconceptions that nobody ever wants to use a financial planner if they're in the FIRE community. They want to do everything themselves. They're called DIY, but it doesn't mean that they want to do everything themselves. The fact that all of them are like cheap or frugal or don't want to spend any money and things like that. And honestly, I kind of know where some of that comes from. In a lot of the major media outlets, they will grab the most extreme person or the most popular one and kind of use that as the avatar. So if you're only looking at the headlines, that's only going to give you a teeny tiny snippet into the FIRE community. But I hear the conversation in the FIRE community about using financial planners all the time and areas that a financial planner could be helpful. And trust is a big thing as well. That's sort of an image, that a lot of us have to overcome, because if people have had a bad experience, that seems to carry over and they put us all in one bucket. And it's pretty much our job to kind of say, financial planning is not just investments. We don't need to manage your investments if you don't want to, but there's all these other 7, 8, 9, or 10 areas that we can help you with.
And I know that all 3 of us are really passionate about sharing, changing the public perception about financial planning, and not just for the FIRE community, but just the public as a whole. and just say, hey, like financial planning goes beyond investments. And that's a big thing about the fire community is they feel like they've got investments down, right? Which is, we'll go into some of those core philosophies. People always tell me, oh, those are the people who make a lot of money. They're practically living as if they were in poverty so that they can save all their money, quit the job they hate as quickly as possible, lay on a hammock all day and just be lazy and don't give back to society in any way. Like that's like, again, that's the very like hard end of like, those people seem to have it all figured out. They're not going to work with me as an advisor. Like, why should I care about them? And, like they don't want to work with me, so I don't want to work with them. Like there's almost a barrier between the industry and the fire movement, at least in our limited beliefs of what the community is. Dan, what were the biggest misconceptions that you've seen, especially in this transition? You're also becoming a financial planner and you launched your own firm. What does that look like?
One of the biggest misconceptions, going back to the whole retire early thing, is that it does mean that you just stop. But I always view it as going to something maybe more meaningful, more impactful. Part of my mission statement is to do the most good. And so I am now free to do things that I can scale my impact. Whereas what I was doing before was very one-on-one dependent on my ability to meet with one person at a time and, make a difference in that one person's life. And that was great. But now I have a way to scale that, I believe, in multiple ways, actually. And so I think that for financial planners who want to work with someone, or if you have a client that wants to fire or talks about retiring early or switching careers, I think just being able to have those really helpful conversations that may help direct that, give them good, thoughtful questions to think through about, I've always heard it said, like, you should have something to retire to, not to quit from, and so that's always been good. And that was one of the things that really helped me is I hit a tipping point where I realized that becoming a financial planner was a very worthy cause to retire to. And so that really motivated me and drove me and helped me confidently leave my other job, which was pretty secure.
I love that you mentioned this ability for financial advisors to possibly serve people in this community who, especially when they start to understand that financial planning goes beyond the investments, you must understand where you are before determining where to go and how to get there. And that's the same thing with, working with somebody in the fire community. You can't serve them well if you don't know where they're coming from. I would love to talk about some of the core philosophies, kind of technically and mentally, behaviorally. What are the core philosophies of fire? And we'll start with you, Jackie.
To me, the core philosophies of fire really isn't anything new. Growing up, my dad would tell me, live on less than you earn. Don't spend everything that you have. You got to always save something. You don't want too much debt. I mean, none of those things are new, right? But I guess under the fire sort of branding or labeling, it's attractive to more people, and perhaps more people that are, of a certain generation, if that's all they've heard. I think one of the main ones that might have some planners thinking that, hey, why would they want to work with a planner, is that typically they will do investing the easy way, just using a straight up low cost index fund. But broadly, if I had to draw a picture, it would be make more and reduce your expenses. And so they look at a savings rate, a very high savings rate. So if you're making $90,000 a year, you don't spend $90,000. You might spend $50,000 or $60,000, and you invest the difference, and then whatever you have to pay the tax man. So that's a big thing. But like I said, I feel like these conversations you might have with someone that's identifying as part of the fire community, they're just philosophies that is good for anyone. Like, a lot of times when they say they want passive income or they want to retire early, if the next question is, tell me why. And a lot of times you'll hear things like, well, I'm in a toxic work environment, or I discovered I'm in a field that I don't really love and I want to be doing other things, but financially I can't do it. That's really what they're saying. They may not ask that question outright, but that's the conversation that now you get an opportunity to have with your clients.
I'm really glad that you brought up this idea that the things that people in the fire community do, like, are not really complex. Like, they're actually avoiding complexity in a few ways, right? They're typically going to invest. If they are investing, it's in like low cost passive index funds. There is like kind of like a real estate arm of that. Some people really like the idea of like buying more assets, like spending less money on expenses and more money on, purchasing assets that are going to build and provide passive income in the future. Diversifying their income in multiple ways, whether it's like a side hustle or even funny ways like, credit card or like house hacking. Most of the people I know within the fire community, they never have to pay for travel. Like it's all like, they've got more points that they could possibly spend. And again, they're not using a credit card to pay for stuff they can't afford. They're pretty frugal. I mean, that barrier between cheap and frugal can be really thin sometimes,
Right.
especially in this community. They really want to optimize every dollar. And that also comes from investing on two ways. Low cost. So if they're going to buy an index fund, they're going to buy, hey, if I'm going to go to the grocery store and buy a banana, like if there's 3 different brands of bananas, I'm just going to buy the cheapest one because they're all the same ripeness, they're all the same taste. Just buy the cheapest one. The same goes with investment management. A lot of them view investment management as overly complex, and we've seen the history on complexity doesn't typically outperform; it typically underperforms. Sometimes people in the fire community view, especially investment professionals, as creating complexity for the sake of job security. Like, hey, the more complex I make my investments, like the harder it is for them to possibly do it successfully themselves. Dan, could you mention some of those core philosophies that really grabbed you from the beginning?
For me, it was the low cost passive investing in index funds. But kind of a unique twist of me is that I had a financial independence blog and investing blog before I became a financial planner. And people in the fire community thought that my approach was too complex. And it was like a 2 to 4 fund portfolio is what I was mostly researching. And so I kind of operate under the philosophy. Einstein has a good quote, and it's something to the effect of keep everything as simple as possible, but not simpler. And I do think there can be a philosophy that I call simplistic within the fire community. And so I think sometimes that could be where oversimplifying some of these more complicated things can result in potentially suboptimal returns or outcomes. But I think even more so than as advisors, we should recognize that and try to help do something that's reasonably complex, we'll say. So like with investing, if I have someone in a solid like 4 fund portfolio right now, I can explain why that's enough and why they don't need 12, but also why they maybe shouldn't have 1. So that is one thing. Another kind of misconception I think that goes into the core philosophies is that maybe advisors underestimate how much people within the FI community know. And there are some really sharp people putting out great research, PhD level in economics, MBAs, CPAs, even CFPs, that are putting out really good information within the fire community to really educate everyone to be better DIY. So I think that just self-knowledge and having a growth mindset is very, very common. And so I think that if advisors come at them from a position of, we're going to teach you everything, we're going to do everything for you and be very hands-on, that may not be well received. And that's really not what they're looking for. They probably want guidance and oversight, but perhaps still want to feel that DIY approach is what they have.
Yep.
Even a lot of times they want a second look. Like they believe what they've done, but they recognize, they're not a credentialed professional. What gaps are still there? What are they not looking at? So I hear a lot of people wishing that they had a second look from a professional.
We could offer like an audit or an investment portfolio review,
second opinion, something like that.
Yeah. And I think that offering that from an advisor's perspective could help really build a lot of trust and maybe establish a longer term ongoing relationship too.
When they come to me, the number one thing they say is, I don't know what I don't know. By the way, when they say that, that means they know like 90% of what they need to know. And there's that 10%, which is really the personalized part that I can really say, hey, all this stuff. So, but let's figure out which education actually applies to your situation. Because there's a lot of noise and there's a lot of great education, but as there's more resources, there's more noise and people are like, I don't know who to listen to. Like there's so many, especially there's a lot of, kind of dogmatic one size fits all that hardly fits anyone advice from different areas. One example of that, by the way, is you mentioned, Dan, like, the 3 or 4 fund portfolio, there's some kind of gravitate toward the Boglehead 3 fund portfolio. Some are really into diversification, and you'll see a lot of in the fire community are really going toward more of like a value approach, like a small value, international small value, really trying to diversify in really, really optimized ways. versus there's
Mhm.
others, actually majority, they kind of have this whole, just VTSAX and chill is literally like the phrase they use, which is
Yeah.
just buy the total stock market index fund, simplify and automate the things that are out of your control, like the stock market performance, so that you can spend more time and energy focusing on the things that are within your control, which is just like you said, Jackie, like increasing your earnings and reducing expenses and aligning your spending with that what actually provides value, subjective value to you as a family. So there's a lot of fundamentals that go into the philosophy, but at the same time, you're working with people who, by the way, I actually looked at the research of the financial planning clients I've worked with. Actually, half of them read Kitces articles. With that said, like most of the members of the FIRE community that I've served as a financial planner, they actually technically know more than most financial advisors do. Some advisors say, "Oh, the FIRE people, I hate working with them." It's actually very similar to working with an engineer. There's a lot of financial advisors who say like, "Oh, I hate working with engineers. They upload 50 documents. They have a master spreadsheet of every dollar they spend, like, assumed for the next 30 years. Like they're really detailed and optimized. They ask a lot of questions, which depending on the way you're built your model, like answering a lot of questions may not be really that efficient. Even though we know a lot, we're still keeping things simple, low cost. But by the way, we also need help with the things that we don't know in terms of applying to our personal situation.
And I think that they really want to be educated on those
Mm,
things. Like you were saying, like they don't want it to just be handed to them or they don't want to hand it over to you. They really want to be actively involved in it and
mm.
to fully understand what and why they're doing it.
Financial planning is really personalized education to help families make their own well-informed decisions. So rather than telling people what to do or doing it for them, I provide personalized education to empower them to really implement and monitor successfully, even if I'm not here to handhold along the way.
Yeah, and Cody, I love the term personalized financial education for what we do, because like an example would be, examples always help. So let's say if you're talking to your client about HSAs and you just say, and they ask you, tell me more about an HSA. I want to better understand them. And if you just say, well, it's a vehicle that gives you triple tax savings. Okay, we know that's true, but they're going to want to know a lot more detail, like, okay, when you make contributions through payroll, you don't pay FICA tax. That's your Social Security and your Medicare tax. And then while it's in the account, it grows tax free, just like an IRA or 401k. And you can even invest the money that's in there if you decide to use, they're going to want a little bit more detail and understanding of it. And because we're financial planners, we got great training in there. And so this is our compelling value. Their neighbor or someone else in a Facebook group might not be able to go into detail and really give them the latest, how it's going to apply to their overall financial picture. So things like that. That's sort of a FIRE person. And again, some people will self-identify that way, but not everyone will, that has a thirst for learning a little bit more and not just wanting you to do things and then you close the curtain and you do it. They kind of want to see, how it's done, or ask you, how does it apply to me? Or I'd like to know more about that, that customized financial education.
What are some financial education, topics that you find are, really apply to the early retirement community that aren't well covered within the CFP education curriculum?
Dan, you and I just passed the exam in the last year. And so one of the things that I thought was not covered that well, I mentioned HSAs. It's covered, cursory, but like 72T, substantially equal periodic payment. So it's covered cursory, but for FIRE people or anyone seeking to retire, let's say before 59 and a half or before 55, there's a big question to answer there if you're going to retire early. And that's, how do I get my money out of some of these retirement accounts if I'm not 55 or 59 and a half? So usually rules around that, the FIRE people are well versed, or it's well discussed amongst people in the community. So those are just a couple areas that I know are a big deal for most people wanting to retire early, but not really covered, that thoroughly on the exam, because obviously exam has a ton of content.
I think too that there is a lot, like you said, that's kind of, touched on in the CFP, or you learn a little bit. Maybe there's one question on the exam. But for me, it really comes down to the strategy. like going throughout the CFP program, I didn't learn the strategies that would help someone retire early. So we can all know about like 72T and everything, but if you're not thinking that proactively when someone's in their 40s, that maybe when they hit a certain point, we're going to begin this, that is where the strategy piece comes in, or thinking about utilizing like a taxable brokerage account as a bridge fund to cover you from 50 to 59 and a half, and how that might work. And then maybe some of that gets into the different types of fire, or like Coast Fi, Barista Fi, and all that stuff that I'm sure we'll talk about. So I really think we probably know the names of a lot of stuff that they talk about in the FI community, but they're maybe using it differently. And so we could, I think, bring that professional approach. Like oftentimes I'll see something that's like almost right, but not quite right. And so like we could bring that touch and kind of help make sure like this is exactly how you do it, so the IRS doesn't look at you twice, or you're, not accidentally committing tax fraud or something. So I think the strategy piece is key.
Yeah, I agree with that strategy and the application of it, because in order to apply some of the things that you have in the CFP curriculum, it may need to be applied slightly differently for, a fire person. So yeah, the strategy, application, and in the context of their whole, financial goals.
As somebody who's really, really nerdy on especially like the accumulation early distribution strategies, if you haven't watched already in the Measure Twice planners, there's literally a video lesson just on the 72T, the Rule of 55, Roth conversion ladders. Again, that's one of the things that we learn. We learn what Roth conversions are in the CFP curriculum, but we don't put the 5-year clock on each taxable conversion before 59 and a half and the Roth conversion strategy. Like we don't marry it into practical application of how somebody can utilize this to retire early. The biggest question that comes to me from anybody retiring early, and by the way, this is something that even if you don't work with somebody who plans to retire, a lot of people, just like Jackie, you mentioned, a lot of people are forced into early retirement. Around 70% of people actually retire before Medicare starts. So, before 65, the biggest question people ask me is, or the biggest assumption people say is, oh, like I have enough money to retire early, but my medical insurance is going to be like there's no way I can afford $30,000 a year in medical on top of, there might be they're using that 4% guideline, the 4% rule we call a guideline. They might not know about the the ACA, the premium tax credits through the healthcare insurance marketplace. Having a balance of asset tax location of, having the pre-tax, the tax-free, and the taxable brokerage account. I really do think for the fire community, the taxable brokerage account is such a, it sounds like such a simple, it's just kind of the normal brokerage account. But there's so much powerful flexibility. The capital gains treatment, the withdrawals aren't taxable, just the dividend interest. You can really develop those vehicles to have a ton of control over taxable income in early retirement, so that you can legally manipulate your income so that you can take advantage of some of these other opportunities like credits and deductions. There are a lot of great ways to marry your education with some of those philosophies so you can really tighten your own knowledge. I always say that there's two things. The best way to learn is to teach. And when you teach, you learn twice. So if you're a financial planner who loves to learn yourself, I think you'd actually really enjoy working with families and individuals within the fire movement, because they love to learn like this. You know how excited I get about this stuff? Like there's going to be clients coming to meetings, like they're going to get to the meeting early because they're so excited to learn. Like these are people who, like, when they commit to financial planning, they're going to show up. Like they really want to learn this stuff. And it's going to be might be kind of shocking and surprising, but I think you're really going to enjoy the conversations you have with people who think about money kind of as a financial planner without being in the industry themselves.
I'm still challenged by some of the stuff I read and see in the fire community. There, even after going through the CFP, Series 65 exams, there's still stuff people bring up that I may have barely heard about, or maybe I've never even heard about. And I learned stuff even from them. And so just the questions they ask are great opportunities to dig deeper and learn for yourself.
Yeah, I can say a lot of what I learned from the fire community and kind of taking this journey myself. I retired early myself. So I learned a lot about, some of these rules, getting money out of your retirement account early, and so many other things that helped me with content on the exam to best understand it, because the exam is based on applying the knowledge that you get from the curriculum, not just one sentence question. So one of the other things you mentioned, the Affordable Care Act, that's a big thing for people retiring early, because like you said, they've got a bridge figure out what they're going to do with health insurance from, let's say if they retire at 45 to 65, that's 20 years. But as a planner, you've got a lot of existing knowledge where if you think about it, there's another type of person that have had to figure that out. Those are self-employed people or small business owners. So that's not even unique to the fire community, but you could bring that body of knowledge to them. And again, like you said, these are I'm still part of the fire community, are personal finance nerds. We love personal finance. We enjoy talking about it. So you could have some really rich conversations with someone that is into finances. And I think that's how each of us kind of jumped onto the CFP path, taking the exam, deciding to become a professional. And as we did that, we realized that there was a void of people that would serve the fire community, things that we maybe would have wanted. So there's a market out there. And, I think the traditional layout of how, some planners operate has not been, accommodating enough for what, fire people might be looking for.
Why does the fire community typically avoid financial advisors? We talked about a few of the things that they do differently, or maybe they view that, that they prefer simplicity over complexity. But Dan, back before you were an advisor, if you were to hire a financial planner, what would you really look for, and what would really provide value to you as a client on the other end?
I mean, the biggest thing, and this is me overcoming my own struggles with being cheap versus frugal, but would be costs. And so there's a lot of talk in the fire community about AUM, commissions, how advisors or any type of person who considers themselves an advisor, which is unfortunately sometimes insurance salesmen, but just how they're reimbursed. And so that's a huge barrier. And so I think for advisors who want to work with people in the fire community, being fully transparent about your costs and what your fees are. And so, for example, I say that I'm flat fee and offer a menu. I'm fee only, and I offer a menu of flat fee services. And that tells people exactly kind of what that is. And if that resonates with them, then maybe that's good. But still, I think there's going to be that kind of frugal bent that they have, and they're going to not want to spend a ton to get the value. And so I identify with that, so I can certainly empathize with them.
If somebody in the fire community goes to an advisor's website, financial planner's website, even if they provide the service and the process that they would love to, commit to, if there's no fee as a dollar amount on that website, it's very unlikely that they're going to move forward. And it's, it doesn't say anything about the advisor. It's not the advisor's bad or they're a bad person, but it's that extra level of transparency that the fire community, they want to know how much something's going to cost before they start.
Transparency is absolutely huge. We're in a world now where you have to have transparency. When you see job postings now, if the company doesn't put at least a range, they're going to lose out on a lot of great talent. And it's the same thing when it comes to financial planning now. I mean, your ADV has to somewhat have, how you charge or whatever, but instead of having the client or, a fire person to go dig and look at your ADV, why not be super transparent on your website? I mean, it could help identify both, that person that's looking and you better assess whether or not you're going to be a fit. By having your prices on your website is probably going to just sort of weed out the type of person you're looking for. And the fire person wouldn't be turned off by your prices per se, or they may not, but if they're not there, that would probably turn them off even more.
Advisors have told me that the fire community, they're only looking for like the one-off, like the hourly, like the one-off question, get all their answers in 1 hour for the least amount of money as possible. But what I found is that there are 3 services the fire community is looking for, which is hourly, project-based, which is comprehensive, but just it's a limited scope in terms of timeline. So there's hourly, project-based, but ongoing is also valuable. But typically the ongoing, most likely is not going to include investment management, or the investment management should be offered as a flat fee service, again, with that level of transparency of knowing exactly how much they're paying before they sign on the dotted line.
I was just going to add that I think they will view your prices as an investment, and they'll expect a return on investment. And so I know that we all hate this, and I struggle with this going from the fire community to being a planner, but as I'm setting my prices, I'm always thinking, what kind of return on investment can I get a client? And then also, how do I communicate that? So really just having clear communication channels about what you're doing, how you're doing it, how it benefits them, the value that you bring. I think that's really important to be, again, fully transparent on your website and obvious.
So Dan, you mentioned to me previously that one thing that you would have loved, or even now, would be to actually go into some life planning, which actually kind of goes beyond the numbers. Like, could you tell us a little bit about, like, why would life planning possibly be something that the fire community would be looking for in the future?
I think that's because I grew up very cheap. And so as I became an adult and I started to make a little bit of money, I was still cheap. And then as I made more money, I just got more cheap. So that was good for fire, but not so good for life. So it was actually my wife that helped me kind of overcome that. And it's been a slow process to be comfortable buying quality, to spend money on travel, to spend money on a weekend away or something like that. And so that's where I also think it's hard to quantify that type of value that you bring. And I know I just said that people want a return on investment, but for someone like me, and I know there's many people like that in the fire community that probably err on the side of cheapness rather than true frugality, I think that would be so beneficial. So being able to ask those good, thought-provoking questions, and I always come back to like living out their values and spending their money in alignment with their values, because a lot of people think they are, or they think they're spending their money and their time aligned with their values, but then when you really push them, they're not. And if you can create a plan for them to do that, then I think they'll benefit so much. And I think that will build that rapport and that trust with an advisor.
The public is being taught by a lot of media sources how to save and invest, but nobody's teaching them how to spend. Intentionally spending in alignment with their personal values is not something that's typically taught, right? A spreadsheet's not going to solve that problem in financial planning of your inability to spend money on what really provides value. One thing in the Measure Twice Planners course I talk about is when you're looking at that credit card statement, don't just look at the interest rate. Don't just look at the balance, right? Look at how they're spending their money and figure out, are they investing not just in their finances, but their physical, mental, spiritual, relational wellness? And to have those deeper conversations, which I love that the life planning designation, that just the whole method of planning is going beyond the what and the how and talking about why.
Something that really resonated with me was feeling like I had permission to spend because we were doing so well in the other things. And so a recent couple I worked with, he's in the Army, and so I'm in the Army, in the reserves now, but we have what's called an LES, and it's kind of like your pay statement, but it has your accrued vacation days. And he had like 100 days of vacation. And so people get that, it got carried forward from COVID, but he hasn't taken vacation like 3 years. And so that was something we were talking about. But once we developed that plan for him and his wife, and they could see where they were headed and that they were on a good track, it's like, okay, you have permission to back off a little bit. You have permission to take these vacation days and, spend money on hotels and flights and to do that stuff. And that's freeing. And I think that's where the plan that we give them, and they see that we can spend money now today and we're still okay in the future. I think that that's really, really powerful. And that was part of what really helped me. So that definitely resonates with me.
Yeah, Dan, that is powerful. I mean, so you brought so much value to them, and a lot of that value, you can't even put a price tag on it. So to me, that's
But I did.
Yeah, you did. In their mind, I'm sure they're saying that was worth every penny and then some, like money well spent.
I think so. If it was just about dollars and cents, I don't think they would need us, because technically there's the information out there somewhere and they can read a book or another podcast. But it's that kind of artistic weaving the knowledge with their life and getting it all together and helping them see that vision for the future. To me, that's the power that we have. And that, I think, is where the FI community would really benefit from working with a planner.
A characteristic of a good financial planner for the fire community, one of the characteristics I would say is genuine curiosity. Right? Like this is the type of person that doesn't just ask questions so they can check the box on, oh, I got to make sure I ask these 3 questions, right? But it's you're asking questions. I almost consider my job as a financial planner for the fire community as a forensic accountant for good, right? I'm always like, I'm going deeper, not because I feel like I have to or I'm checking the box, but I have such a just genuine curiosity to learn more about people. And the fire community would love to go to that deeper level. It's just that they might not have been invited to or inspired to in the past. If they feel like you know them more than sometimes their spouse knows them, or even deeper than other family members, like that is that connection and that trust is much more sustainable than any type of business model or compensation structure in your business. So having deeper conversations, that's actually the glue of moving from transactions to relationships as financial planners.
Yeah, and I think too, if we can shift from just talking about money to viewing their time, their energy, their relationships, their experiences, and kind of treat that as a currency and an investment, then that I think really resonates. That's something that I think we all need, one, but that's something that has certainly resonated with me as well. And that's so rewarding to help people kind of connect those dots. And then they realize they've been spending money in the wrong places. But it's really not about the money, but it's about those other things.
Yeah, and the CFP board, they have that, psychology of financial planning that they just added. And I was so happy to see that. Part of my program for my master's degree was at Kansas State in financial therapy. So it's not that I'm a therapist, but it did help me feel more comfortable with sort of exploring the emotional side and how people felt. So if someone's saying, yeah, I'm looking to retire early, the next question would be, tell me why you want to retire early. And wow, you'll get all kinds of things, from geez, I saw my dad work until he was 65 and then he only lived for another year. And I really want to travel more with my kids while they're, under 18 and not out of college yet. So there's just so many reasons. And I think we as planners get the buy-in. We can hear a client share what's really important to them and why they are looking to retire early. There's always some reason. And if you can kind of inspire that client to think deeply about it and to have a conversation about it, I think that's going to help with your compelling value that you're bringing to that client.
Absolutely.
I think the whole point is that everyone's not the same. Just like the general population, everyone's different and unique and special. And so when people see the term FIRE and it conjures up some image, that is just one avatar. You got to talk to that person and really get to know them to really understand what's behind it. But it's not just one thing. And I personally, I've been in the FIRE community for a long time. I don't subscribe to every little thing that I see sort of highlighted in the media. I drive a luxury car. I retired with debt. I have a low deductible health plan right now.
What are you doing, Jackie?
I know. I had an HSA for a really long time. I'm getting these renovations done to my house now. And the thing is, it's everything in context and putting it together as a strategy. There's certain things that I'm doing, like, way back in the day, I took a 401k loan for $50,000 to invest in a property that I decided to pay cash for. It was like right after 2009, and it was easier to do it that way. But some of the things that I do, I may not recommend it to other people, but it all depends, right? It always all depends on, you got to put it into context and look at the full picture and how each piece fits together. And that's the same thing with the FIRE community.
Yeah, one thing I love is that it's so diverse. And there are people all along the spectrum of where they are on the journey to financial independence. But then there are so many too in just their approach, a huge diversity in approach. So the people, like we call it barista FIRE, if you want to work part-time at maybe a job that covers your expenses or something like that, so you can just not go backwards basically. Or if you hit Coast FI and you basically just work enough to cover your expenses and never plan on adding any more to your investments and you just want to let them grow. But there's also people that just want to do a job that they enjoy and maybe stay home with kids more often and, just make some and keep going. And so there's just so many different flavors of it. And so that's something I love because you can really tailor it to any individual.
This approach also works really well for somebody, Jackie, as you mentioned, somebody in like a toxic work environment who they're not necessarily financially independent, like never work forever again, but you could look at their numbers. You can have deeper conversations about what's important to them. Through that conversation, that's probably where you realize that there's a toxic environment at their work. They might not have said that right away. You got to go deeper.
Right.
But once they mention that, you could say, hey, we ran the numbers. I put on my spreadsheet hat for a moment. We were able to figure out that, hey, you could actually take a whole year off if you needed to. Not just, financially, but talk about the mental and physical stress on you by being in that job. You could spend a year, travel, enjoy time with the people you love and ignite some new creativity in you for your future career. Fire doesn't have to be quit forever, just as we mentioned. This can be the perfect transition into a sabbatical conversation, or maybe you can work part-time instead of full-time. Keep finance personal. When you keep finance personal in that way, I always got to just put the trademark on everything, right?
Yeah.
When you keep finance personal, you can really like customize really a unique financial plan. And when you get to that level of customization, it's a client for life, whether they're hourly project based or ongoing. The fire community are the types of people who tell their friends when there's a good deal. And if you're a good deal,
Absolutely.
not just financially, but if you're a good deal in terms of providing value that really is a multiple of the cost you charge, it will go around the community, and the demand for your service will increase, I believe.
Yeah, and Cody, to that point, community is a big deal with fire people. Most of them are part of some kind of group or either online or sometimes in person. So they do talk a lot, and they will bounce a lot of stuff off of different people that again are typically very smart people that are money nerds, just like we are.
I love the idea of taking the sabbatical. That was something that really helped me. And I would say that that's really where fire became very important to me. But, I'd say I was accidental fire, I guess, because we were just being cheap and frugal and then saving and investing a high rate. And then getting lucky, with the stock market going up for the past decade. When I had that mindset, it was from the fire community that I found that ability to accept a sabbatical. And when I first realized, like, why not take a break? Why not change careers? Why not stay home more with my son and, give my wife a break and let her go back to work some? And so it was just really very crazy. I think a lot of my family thought that we were a little weird for doing that. And my wife thought I was weird for wanting to do that. But it's worked out so well. And, it's not that scary now that it's over, but I can see how many people just view that so crazy. You're not working. Why not? And
what's wrong with you?
Yeah. What's wrong? Or, how can you afford to do that? But I really think it's healthy for all of us, especially financial planners too. I think we could really organize our schedules, our days, our weeks, our months, our years to be way more flexible and kind of have those mini sabbaticals or whatever we want. And I think if we do that and clients can see that, I think we can have a bigger impact in talking to them about work-life balance and priorities and values.
Another one of those financial planning topics that kind of apply slightly differently to fire people would be Social Security. So typically when you're talking about Social Security, you're talking to 60 and 70-year-olds, right? And when it comes to fire people, generally the thought is that Social Security is not going to be there. Most of them do not factor in Social Security at all. And so for me, I'm kind of in the middle there. I'm not in the 60s or anything. I'm not 30, but I started looking at Social Security and saying, okay, what's the minimum you would have to work to be able to get Social Security? And we learned this in our, CFP curriculum that it's 10 years, but nobody ever talks about it from that perspective. So I started doing all this research around someone that only worked 10 years or at least less than 35 years, approximately what did their Social Security look like? I did research on, the likelihood of Social Security completely going away, which again is what most fire people think. And so when I love to, do sort of case studies myself, and doing a case study on, someone that worked for 10 years, they decided to retire early, never made another penny, and just let the 10 years grow and get indexed for wage inflation. It was amazing that they would end up with about $1,000 a month for the rest of their life, passive income adjusted for inflation. And even if they don't think that it's going to be there, or they're pessimistic about it, once you start showing them some numbers, it becomes a powerful backstop. So that's where, the knowledge that we have as CFPs can be easily applied to kind of make them think a little bit differently, or at least, again, getting that second opinion or that second thought. If they discounted Social Security too quickly, they probably never, ever even included it in their numbers at any point.
So for financial planners who want to learn more about the fire community, what are your favorite resources that you would tell somebody that you'd recommend to another financial planner? I'll start with you, Dan.
So I think my two favorite books that have to do with the fire community are The Simple Path to Wealth by J.L. Collins. I love it because he gets at the mindset so well. And so for me, that was a book I was reading when it just hit me like, why don't I take a sabbatical? I can do this, and I need to shift. And so that was a really good book, full of great mindset stuff. He's also the guy where they get the VT Sacks and Chill approach. So I don't like that so much, but love the mindset. The second book is called Set for Life by Scott Trench. He's part of Bigger Pockets, so more into the real estate. But one of the things I love about that is where we talk about emergency funds, he talks about having a runway. And so it's kind of like, I use that analogy now with my clients for, we want to have a big enough financial runway to give you the freedom to do something new. So whether it's a new venture, new business, getting into real estate, whatever it is, I just love those analogies. And so both of those books are really good. And then aside from that, I love, like Big Earn. Big Earn has a blog. He has a PhD in economics, and he nerds out on the 4% rule. So he has probably written the most research out of anyone on safe withdrawal rates. And he has an excellent series on that probably every advisor should read. Those are probably my favorites, in addition to the regular Choose FI community.
And how about you, Jackie?
Yeah, Dan mentioned some really good ones. Choose FI was probably the first one where I started thinking in terms of FIRE. And he brought on a ton of different FIRE people. Choose FI is going to probably give you a lot of variety. Like, you can go down the rabbit hole on that. But for me, I do like some in-person stuff. So I live here in Ohio, and we just had a conference called Economy. It was bootstrapped by a young lady that's pretty amazing, but she came up with this conference where basically it was a money party in person that was serving the FIRE community. Also, however you learn the best. So if you like to listen, there's a ton of podcasts. There's one got on my shirt called Catching Up to FI. The reason why I like that, because these are kind of people in the middle. They're not boomers, they're not millennials. So there's not a lot of people talking to them about their finances, but many of them are a little bit more conscientious about the retirement piece because they're getting close there. I love J.L. Collins as well. He's got a blog that he turned into a book. He was writing these letters to his daughter, so I thought that was kind of cool. I think about some of the professionals that I listened to when I was preparing for the CFP exam. Many of them are in the FIRE community. Sean Mulaney, I think the FI tax guy, I think he's in this group. Cody, you've helped me a lot as well. And when I was watching your journey from being a musician to become a financial planner, being super helpful in a lot of the groups that I was in. And then I saw that you were a CFP professional, and it warmed my heart to kind of see you as a FIRE person making the jump to being a financial professional, because broadly, a lot of people think that the FIRE community and financial planners aren't compatible. And you've shown that that's possible. And there's many, opportunities and gaps that we can fill. If we're not seeing financial planners that serve the FIRE community, well, all three of us have stood up and said, you know what, we think we can help with that. So that's what we're trying to do here. And I'm sure there's a lot more out there. Even if you don't serve the FIRE community exclusively, you could have one or two clients, or some of these principles and things that you learn from the FIRE community can be easily applied to other clients that you have or in some place in your practice.
By the way, I'm going to share those resources plus some of my favorites in the show notes. You're going to have a whole list. You could go down. I mean, there's so much of a rabbit hole here. By the way, like the 100th episode of Choose FI, it's kind of like, they come back to like, hey, like, what is financial independence? Like they actually kind of come back to the basics on episode 100. So I'll share that episode for the Choose FI podcast. And also, I was fortunate enough to be invited to be on the Choose FI podcast last year. So I'll also share that whole episode is actually about how, the DIY investors within the FIRE community can also be served by financial planning and also create their own. One thing you can do is you can help this community even create their own financial plan, whether it's creating like one-to-many resources, create a blog, just like, Dan, Jackie, like we're all creating these resources that go beyond one-on-one financial planning, because that's really the way we change the public perception of what we do, especially for this community, is by giving in other ways outside of just the one-on-ones. I absolutely love this conversation. We could probably talk once a week about this stuff. I'm really excited for Measured Twice Planners members to get a little bit deeper dive into what FIRE means, also what FIRE doesn't mean, right? So the misconceptions, but also fantastic opportunities for us as financial planners to serve different people differently. Any last words before we head out today?
Yeah, I think my last word is just that when someone mentions passive income or FIRE or wanting to retire early, just now remember how broad that can be. So you almost can't even have an opinion on it without saying, well, tell me what that means to you, or tell me more about it, or tell me why. So let that be the spark, or I guess the initiation to like a really cool conversation with your client, even if they don't say the term FIRE, but if they're, using some of those other buzzwords that you hear, use that as a conversation starter. And hopefully this little short video just kind of gave you some different perspectives from people that are both in the financial planning world and in the FIRE world.
I think that's great.
Thank you so much for being here. Excited to go back to doing the work in the FIRE community, but also spreading this generosity through Measure Twice planners. Thank you so much, Jackie and Dan, and I'll see you
Thank you,
around.
Cody.
Yeah, thanks, Cody.